Hi, Nancy. There is a big focus on Italian banks here today. The European Banking Authority is releasing its latest stress test results, and investors are keen to understand how stable these institutions are. As you know, Italian lenders have been hit by concerns over the country's politics. The anti-establishment government in Rome promised to increase public spending, which has raised worries about the stability of the Italian economy given its huge debt pile. So let me give you some numbers, Nancy, just to put this story into context. The FTSE Italy Banking Index is down 22% since the start of the year. It is also 34% lower from a peak seen in April. Let's not forget that these institutions, these banks, were among the top performers at the start of this year. Let me give you as well some of the individual stock performances. Year to date, Intesa Sanpaolo is down 28%, UniCredit is lower by 27%, and BPM has fallen by more than 30%. So because of this pressure that we've seen on Italian banks, analysts told me that the stress tests will be important to understand how healthy these banks are. Let's bear in mind that Italian banks hold about 10% of the country's debt, and the recent spike in yields has added pressure on their balance sheets, and this could potentially force them to raise new capital. So any signs of weakness in today's results will just become another burden for the Italian banking system.
Yes, Silvia, and it does make me wonder specifically when you talk about the amount of bad loans that these Italian banks have had to deal with. I mean, is that really what investors are going to be focusing on?
That is indeed one of the biggest issues here, Nancy. If you look at some of the numbers from the EBA, the NPL ratio in Italian banks at the end of the second quarter stood at 9.7%, compared to an EU average of 3.6%. So there you have it. The numbers speak for themselves. It's important to say, however, that some analysts told me that they do not expect very poor results for Italian banks because the macro assumptions are not particularly hard for Italy compared to other European countries. So if indeed that is the case, if the results are actually quite good, there could be some positive momentum on Italian bank shares. Back to you, Nancy.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.